Alright everyone, welcome to the CFO Swing Watch newsletter's technical analysis video for the week of January 22nd through 26th. Alright, let's start off with the markets. So, last week, what an incredible squeeze up higher. I mean, just look at the daily time frame on the S&P 500. We made new all-time high prices. Right, we have finally hit that new all-time high territory. So it's completely uncharted territory, which means we need to be a bit more careful moving forward since we don't have any previous historical data to work off of. So simply, we're just looking at whole number levels to be used as psychological levels for any near-term price targets. So as long as we continue to move up higher with good volume, this week should be an easy week to trade. Now, if you guys remember, last week was OPEX on Friday, and we had that large volume move up to the upside where we just continuously made higher highs and higher lows throughout the entire day. And I even gave you guys that specific SPY swing trade as well. So if you guys took that and if you guys held over the weekend, congrats, because you guys should be up by over 75 through 80% depending on where you guys have entered. So SPY here completely took away my 479.20 resistance level, and it's now way over it by closing on Friday at 482.43. And my initial target for that specific SPY swing trade is at 485, hence that 485 strike call contract. Now, if you do hit 485, I'm expecting to see some resistance since the market is a bit overbought on the hourly time frames. Okay, specifically the 2 hour. Okay, the 2 hour is heading up into that 70 value on RSI. So it's sitting at 69.06 from last Friday. And I'm also seeing a bearish divergence on the RSI as the price continues to move up with higher highs and higher lows while the RSI is making lower lows and lower highs. So it's a hidden bearish divergence. But, just without even looking at the RSI, the S&P 500 is clearly in an uptrend. Now, I'm still going to keep this possible retest of 460 in mind because, again, remember, we are heading into seasonal weakness in mid-quarter one. Right, we're heading into the weakest performing month of quarter one, which is February. Right? So, February through March is going to be probably a very hard month or months to trade, especially since I'm going to be expecting volatility to start expanding further and further from compared to what we saw just early last week. So the S&P 500, again, I don't really have much to say here because we are in uncharted territory. All right, we're just going to use these whole numbers, and everyone else who's looking at the overall markets, the S&P 500, are going to be using these whole number levels. So, 484, 483, 485, or even higher than that. So, again, nothing much to say here other than let's continue to watch the markets and see if there's going to be any increase or expansion of volatility as we head into the last week of January and into the first week of February. Okay, so again, remember, February is the beginning of the usual historical seasonal weakness trend, right? And that will last all the way up into mid-March. Okay, and obviously you guys should read the market summary first before you guys are watching this video. I go more in depth into what I mean by that and what we can possibly do to really understand how we can prepare for the potential expansion of vol and be prepared for an official bottom heading into quarter two, okay, or official pivot if you guys want to use more of an official term. All right, so other than the S&P 500, I want to take a look at the Russell 2000. So IWM. So IWM is one of the lagging ETFs here, the lagging market cap, since we have NASDAQ and the S&P 500 hitting all-time highs together now. IWM has been really weak, right? In the fact that it's been lagging, and it's got a lot more ways up before we see any type of an all-time high price. And especially even with Russell, which is the small caps, and the mid caps, both of them are still very much lagging. So why do I want to focus on IWM if it's lagging? Well, if you guys remember, I love to look at the lagging individual stocks or overall lagging sectors, or in this case, lagging market caps, when we see leaders slowly dying down. So when they slowly die of that, well, the overall majority uptrend is the current trend for these leaders. If that momentum slowly dies down, then that momentum is going to flow right back into the laggards. Right? It's a constant flux of money rotating from laggards to leaders, and then to leaders to laggards. All right, and so if that occurs, which I potentially can't see occurring, IWM will see a continuous run up to the upside. All right, and even with the upcoming potential seasonal weakness, I see IWM consolidating, right, moving sideways during an accumulation phase, which I think can happen for about the next 2 months if we do see that overall market weakness. And once we're able to find that official pivot into quarter 2, we will see IWM absolutely rocketing up higher into new highs and higher highs than what we saw back in 2023, which is sitting at this specific candlestick on the daily time frame at 205.49. And so far, the price seems to be following this general price path structure that I've given to you guys a couple of weeks ago. I think it's over a month ago now. I think the fact that we have been able to hold 189.50, or overall, if you guys just want to round up, 190, is clearly telling us that IWM is not ready for a large reversal to the point where we completely erase the gains that we saw from early November all the way up into late December. So, again, this is a textbook correction, quote unquote correction move from highs in December 27th, right? We have from the lows here, well, from the highs to the lows, this current trend, okay, around 8.55%, right? That's within the range of a textbook 5 to 10% correction. So, with the IWM having a very, very textbook correction so far, and the potential for it to consolidate and potentially move in this price path, I expect IWM to at least reach and retest 194 before we see any type of consolidation as shown here by my price path structure. So with IWM, I truly believe we can get to or back to the psychological $200 whole number level here, and that's the reason why I have been accumulating that TNA and IWM ticker symbols here, right? TNA, right, is the leveraged 3 times shares for small caps. Okay, and again, if you guys want to take a look at the positions, go back to the Charts Focus 1 Discord community, look at the CFO Pro Traders channel, and you guys will see both of these 2 trades on IWM and TNA. Right, they're a couple months out, so it requires a lot of patience, but again, my analysis tells me that we'll be expecting some sort of an accumulation phase for a couple of weeks before we see that rocket up higher. So far, we are up very, very nicely from last Friday. So IWM, as long as we retest 194 and potentially make higher highs and higher lows, we can see this continuation reversal trend back to the upside. Right? And if you guys don't know what a continuation reversal is, well, when we see a slight pullback from a larger uptrend, making a descending resistance trend line that will eventually break to the upside, continuing the current trend, which is an uptrend, right? And again, don't forget that in the monthly time frame, it looks like we're about to end up with a very nice inside monthly candlestick. right? And again, an inside candlestick usually indicates that we should be seeing continuation of the current trend, which is again an uptrend. And again, on the monthly time frame, we're making higher highs and higher lows, right? So this is very, very good to see for the small caps as a lagging market cap. All right, so that is it for the markets. Let's take a look at our first name. So Disney. So Disney is looking quite good. So I want to first start off with the weekly time frame. So it looks like Disney is ready for a mean reversion move back to the upside, or most importantly, back to its triple digit share price. All right, because it lost that back in around, I would say, early to mid-May. All right, that's when we lost that triple digit number. And so Disney has been striving to get back to that triple digit number. And how do we know this? Well, if you take a look at the weekly time frame here, we have been slowly consolidating, making a very, very textbook bull flag here. And last week, it looks like we made an attempt to try to break out of this bull flag as we're seeing increasing weekly volume. That's good to see because that means interest is coming back after this consolidation phase of 1, 2, 3, 4, 5, 6, 7 weeks, right? And I'm not going to count last week because we have this first attempt to break over this weekly bull flag as we started to kind of poke out from this descending resistance trend line. And so far, we have made a great pivot last year around that official overall market pivot around October 27th, around $79 here at Disney here. And if you guys remember, okay, $79 was the official big pivot that we saw back in March lows as well. So far, we've kind of created a very nice double bottom if you're just using the 2020 data and 2023 data. But if you go further back, right, we have another large pivot here back in 2014. So if you add that in, we have a very large macro triple bottom that we're currently working with. And so far, it's held for a third time. So the 79 level is pretty important for the longer term perspective. And Disney on the weekly time frame again, after this massive rip up higher from 79, from the lows here, we have made a nice bull flag, and this is currently what we're trying to work with. So I love the fact that on the weekly time frame as well, we have closed over the weekly 10 SMA and over the weekly 50 SMA, which tends to be a huge crux for any individual stock that you may be looking at on the weekly time frame. And so whenever a stock is staying over and consolidating over the weekly 50 SMA, it's a good sign. Okay, and most likely it's a very good sign that big money players, big institutions are accumulating Disney over that weekly 50 SMA line. So now on the daily time frame, Disney looks a bit volatile from last week, especially with that first attempt to break out and then that big massive pullback. But on Friday, we were able to finally see, with an increased amount of volume plus that kind of OPEX short squeeze like move on the overall market, Disney was able to close over this descending resistance trendline that I just showed you guys in the weekly time frame. So for a very, very easy entry point for us for Disney this week will be 93.20. Okay, so over 93.20 will be a very good early entry point. Now, why do I say early? Well, a more of a confirmation entry point will be over the previous high of the day, so last Friday, over 93.58. Or if you guys want to have even more confidence in your entry point, okay, you want to go over the previous week's high, which is sitting at, on this candlestick here, at 93.76. So if you just want to round that up, a official and even more official and more confirmed entry point will be over $94. So I would say around 94.10 would be a good entry point. All right. Now, the only reason why I haven't put 94 is that 94 is a pretty solid area of supply. There's a pretty good wall of sellers sitting around here. So, if you try to, get in around 94, you'll most likely get rejected and see your entry point falling and you'll most likely get stopped out if you do have a tight stop loss for this week. So 94 is a little risky, but as long as we close over 94, your entry point is safe. Okay, but again, as long as you guys have your stop losses, you guys will be safe. All right, I've always touted the importance of using stop losses when you have an actual trade that you can execute, right, and a game plan, obviously. So Disney. Now, from our entry points, I would say Disney has that possibility of hitting the most recent highs that we saw back in late November at 96.51, or just 96.50 if you guys want to use the whole numbers levels there. But I do have that weekly target here to 97.50. So first of all, from 91 to around 104. Okay, so around this range here. So let me make it more visual for you guys. Okay, 91 to around 104. This is a huge area of supply, right, that are marked in the weekly time frame. But the fact that we're over 91 tells us that the supply is quote unquote getting weaker. It's getting tinier. All right, that's not the correct term to use, but just to give you guys kind of a visualization on what I'm thinking. The supply range here is getting smaller and tighter as we head up higher into this supply range. This very, very wide 14% plus range. So, Disney can be a very good swing trade or even a position trade if you can get up to and break over 94 and head up to 97.50 and eventually breaking over that and heading up into that golden whole number level of $100 per share. All right, so Disney is again aiming long term for that $100 per share, trying to reclaim back its 3-digit number. Right? So those are your profit targets for this potential swing or position trade. All right, so our next name is CRSP, and I'm going to stick to the weekly time frame here because CRSP is another one of those trades that look exactly like Disney. In fact, it's nearly perfect because CRSP has been making a very nice but a messy weekly bull flag, and it doesn't look too pretty. However, with this accumulation that's been going on as it's consolidating, it looks like it's ready to make that nice rocket move up higher for the next second leg up higher into the resistance levels that are up overhead. So based on that, okay, let's take a look at the daily time frame. So CRSP, obviously, all those wicks in the weekly candlesticks are completely seen in detail on the daily time frame. I mean, the past couple of weeks, all day going back to late to mid-December, has been very, very choppy, right? So this one definitely have a very tight stop loss, at least $1 stop loss on whatever entry that you guys personally want to take. But for me, I want to see a nice entry point over 62.20, and I want to have a wide stop loss because I want to be able to make sure I give enough room for the stock so they can tighten up and eventually break out over most of the supply levels on the daily time frame, ranging from 66 to around 68. Right, this 2-point range is what I have for the supply area on the daily time frame. So, even if you guys don't want to wait until it reaches, even 68, the maximum range or the top range of this arbitrary supply range on the daily time frame, there's still a good chance that you guys can make some profit if you guys get a nice entry point over 62 to around 64, 65. All right, that's a pretty good risk to reward trade there. But again, I'm looking at this from a long-term perspective, just as we've seen on the weekly time frame with that nice bull flag, and potentially we can get out of that this specific consolidation and head right back to the weekly level. Now we go back to the weekly time frame of $71.20. So this 71 resistance level has been a huge crux to any attempts to restart this one back to the upside, since this one has been pretty much destroyed like every other name that benefited from the 2020 to 2021 market conditions. So again, on a monthly or weekly time frame, you can see how wicky it is. This specific name, it's a biotech name, obviously. It'll be very, very wicky, and it's very, very prone to big catalysts, like big news coming out of the company itself. For example, like clinical trials or just any type of revolutionary system or solutions that they may have found out for a specific problem. So CRISPR here again is one of those volatile names that will experience that. So make sure you guys have a wide or tight stop loss depending on your time frame. But for me, again, I want to see this name tightening up during this quite volatile trading sessions per trading day, and eventually breaking out and squeezing up higher until we hit 71.20, which is where will be my ideal long-term target. But if you are able to break over 71.20 again, since, well, it's kind of the third time here retesting it, okay, since the first one will be over here and the second time will be over here, right? If you are able to get that third retest, and if you're able to hold and consolidate tightly underneath 71.20 as we have done in the second retest here, then there's a potential for us to see a very good breakout over 71.20. Okay, so for now, I'm just going to focus on the 71.20 level as my ideal long-term target. And last but not least, Carvana. So I'm going to keep this one from last week because, again, I mean, I have already gave a full technical analysis on Carvana. Nothing has changed for Carvana. But again, if you guys missed out on the entry point for a bounce entry, again, which is an early entry point at 42 last week, you guys can still get a good entry point over $46. This is my next major level of resistance that we need to get over. It's the major hurdle here for this stock if it wants to get back over to 57.20 or $57 as a whole number. So for here, okay, I want to see a long over, right, $46.10. Right, this will give us that official confirmation entry point for a potential short squeeze to the upside. And not to mention the fact that this name has seen an increase in short interest percentage again. All right, it went from 40% or 40.04% specifically to 44% plus. So we're seeing this as a potential short squeeze name, highly volatile, highly risky, right? But Carvana can be very, very rewarding if it goes our way. So Carvana, again, nothing has changed with my technical analysis. So again, if you guys want to look at last week's technical analysis video, I will link it down below in the description box. But again, you know, Carvana, this one is it's a very high risk, highly rewarding trade. So make sure you guys know your risks. I will definitely keep a tight stop loss on this one, especially if you guys are using options. So again, I will link that video from last week, the technical analysis video last week, down in the description box below. So make sure you guys watch it if you guys want that full technical analysis breakdown. So again, Carvana, for this current trade, I want to see an ideal long-term, it's a pretty far shot, a long shot here, but I would want to see a retest of 57. All right, I mean, that's a huge run back to the upside, right? I mean, just percentage-wise from Friday's close, okay, that's over 27% or around 27%. So that's a big move. But Carvana is one of those names that has and is able to sustain very large moves. I mean, it had one just recently, right? Back in early to mid-December. So again, Carvana, very nice chart on the weekly time frame as well. Really nice inverted head and shoulders. And again, the right shoulder is being made, the inverted right shoulder. And on the daily time frame, very, very good consolidation, potential reversal trend here as well, just like with the other two names that we've been looking at for this week. Okay, so again, this is the continuation reversal trend, right, with this macro descending resistance trend line that I've just drawn for you guys. And we've seen this for the other two names, right? CRISPR, CRSP, and Disney, DIS. So make sure you guys take a look because, again, all of these three names are very, very much kind of rhyming, quote unquote rhyming here for this week. They all have a particular similar theme and a similar look to them, right? With these continuation reversal trends. All right, so that is it for this week. If you guys liked watching this video, make sure you guys leave a thumbs up down below. And if you guys want to see more videos like this, make sure you guys hit that subscribe button down below to subscribe to the Charts Focus 1 YouTube channel. And remember, you can get access to these videos a day earlier if you guys become a member of the CFO Swinger Watch newsletter. All right, I will catch you guys soon.